Home affordability drops to a 15-year low as home sellers are realizing that it's over. They'll probably never see buyers overspending for their houses ever again. So those days are gone, sellers, and thank goodness. According to a Zillow article posted at the end of June, housing affordability has dropped to a level that we have not seen since 2007. Now, according to the National Association of Realtors Home Affordability Index, home affordability is defined when a home buyer can qualify for a mortgage loan on a typical home. Now, a typical home is defined as a national median priced existing family home, now around $440,000. Now, the affordability index says that a value of 100 means that a family with a median income has exactly enough to qualify for a mortgage on a median priced home. And by the way, that is based, and here's the catch, on them putting 20% down. So let's take a look at the National Association of Realtors Affordability Index chart as of the end of May. And sorry about the old data, but June won't be available for a few more days, but I can assure you that affordability has gotten much worse since May. So here we go. As of the end of May, home affordability is down 45.7 basis points from May of last year. And remember, this is based on 20% down, and I can assure you that most buyers do not have 20% down. So if you waited to buy a home, here's some of what you've missed. The last 18 months or so has brought a whole lot of regret to home buyers that got a little too excited to compete for a home. So let's take a look and see if we can learn any lessons from their exuberance. In this recent New York Times article, it talks about buyer regrets. Unfortunately, the stress from buyers felt buying their homes within the last 2 years was only the beginning. Now they've moved into their home and they're waking up to the expense of paying for the home mortgage. And by the way, guys, sometimes that means they're paying double what they were paying before in rent. And now they need to pay cash or put it on their credit card, any of the repairs that they wish that they had known before they decided to buy their home. In many cases, the buyers had spent all of their cash, all of their parents' cash, and now what the sellers didn't disclose to them because they didn't get home inspections is showing up at a cost that they never expected. And as bad as not getting a home inspection, a lot of these buyers only spent about 15 or 20 minutes in their home before they put it under contract. And when they were in the home looking at it, they were rubbing elbows with 20 other sets of buyers at the same time. Unfortunately, some of these buyers couldn't even remember how many bedrooms it had. Did it have 3 bedrooms or 4 bedrooms? It doesn't matter. We'll figure it out. We're buying it anyway. Now, the moral of the story is if you haven't bought your home yet, you're probably relieved. And for those of you that did, I hope things aren't that bad and that you're really enjoying your new home. Now, buyers, what's on tap now and moving forward? Okay, mortgages we've already talked about are up over 50% if you bought the same priced home just 12 months ago. The Fed has raised rates 3 times this year to help curb inflation. And guess what? Hasn't worked yet. According to those people, we hit 9.1% annual inflation in June. And according to this New York Post article, this is the highest rate of inflation since 1981. And in fact, inflation jumped from May to June 1.3% despite the rate hikes. This article also goes on to point out that earnings fell 3.6% over the last 12 months. Groceries are up 12% or more, and fuel is up over 60%. So here comes the crash landing the Fed was hoping wouldn't happen. The Fed meets again at the end of this month, and I think with this inflation growth, that means another robust rate hike. What that is going to mean is probably mortgage rates are going to go even higher. And guys, your credit card interest rates, well, I can imagine that that's just going to continue to climb as Americans are financing their groceries and their fuel, just to say the least. Now, sellers, I can tell you, y'all better wake up now because if you need to sell, it may get ugly from here. I see many sellers scrambling right now with very little activity on their listings, open houses. There just isn't a whole lot of traffic coming through, and they're getting 0 offers. Or if they are getting offers, they're well below asking price and they're turning them down. I believe a lot of the sellers right now are wondering if they're even going to be able to sell their home. So at this point, sellers, I think that the only thing that you can hope for is that you can reduce the price to a point to where you can entice a buyer to buy your home now before the rest of the story. And by the way, just from the data and the articles that we've been reading over the last 30 days, almost 80% of the buyers have exited the market just based on the prices of the houses now. And with the new mortgage interest rates, it's basically made housing unaffordable for most. Now, that's what I call a reduction in buyer pool. And according to a recent article, the Mortgage Bankers Association posted on July 13th, a continued decline in mortgage applications and an unadjusted basis index decreased 13% from just the previous week. Another important note is the average purchase loan size reached a record in March of 22 at a whopping $460,000. And as of last week, that has dropped $45,000 to $415,000. I'm sure this drastic drop in loan size has a lot to do with price reductions and not just more money down. And I ask you buyers to tell the sellers what's going to bring you back in the market. Drop them in the comments below, and also where you're looking to buy. Hopefully these sellers will be checking out your comments. Now, I can say one thing for sure. If you are planning on selling your home, so are a lot more of your neighbors. Competition is rising faster than we expected. And let's just take a look at a recent Arizona news article. According to this article, in the Valley, in the last couple of years, there's averaged about 3,500 to 4,500 homes on the market at any given time. Now that number is about 17,000. Guys, that's over a 400% increase in home inventory, and fast. As I mentioned before, open house traffic is slowing down or completely non-existent. Days on the market is increasing, and contingencies like home inspections and seller contributions, which means seller cash back to cover things like closing costs, are back with a vengeance. Quite simply, guys, buyers have cooled off. And now to top it all off, we're at the highest level of contract cancellation since before the pandemic. According to this recent Yahoo Finance article published on July 11th, it was discussed that nearly 60,000 home purchase agreements fell through in June alone. Now, guys, that represented about 15% of all the homes that went under contract in that same period. Also in this article, senior Zillow economist Jeff Tucker says that contracts falling through may partly be from the buyer contingencies. He also goes on to say that the typical mortgage payment is up over 60% more in just the last 12 months. Finally, in this article, Jeff throws a big statement. So buyers are pulling back, he says. That's step one. Inventory is beginning to climb, and the last domino to fall, really, is that starts to push home price growth back down. Now, I've been saying this for months, buyers. This is the opportunity that you've been waiting for. So let's talk about a few important buyer tips when you're considering buying in this market. Get pre-qualified. That means you know what you can afford and stay within your financial means. And if you're looking for a deal, first find an aggressive, savvy agent like myself. Look at homes that have been on the market more than 7 days. And guys, if you can find one of those 15% of the houses where the contract has fallen through, those sellers are even more prepared to make a deal. So now when you go look at the home, make sure you are staying in there for a while and you're looking long and hard at the home's condition. Now, I'm not expecting you to be a home inspector, but guys, open up the sink cabinets and see if it looks like there was water damage from leaky faucets. I always recommend open up the closets, see where everybody has stashed stuff. So they may want you to see a nice clean house, but when you open up the storage areas, if it's disastrous or they just kind of threw things in, really take a critical look at how much the seller actually prepared to put their house on the market and to offer it to you to come through to check it out. It will tell you a great deal about how much that they cared for the home while they've owned it. All right, and finally, guys, offer the price that you're willing to pay and stick to it. Get a home inspection and don't be afraid to ask for those major repairs. All right, guys, I'm going to give you my best pro tip. So when you're taking a shot at these sellers and you're offering them prices that are actually lower than what they're expecting, much lower in some cases, one of the ways that you can make that blow a little easier for them, because now they're not getting free rent back for 6 months, but they need to go somewhere, they need to move. So one of the ways that you can make your low offer more enticing is to give them flexibility as to when to settle. So instead of coming in strong and saying, get out in 30 days, here's your low ball offer, and I want you out. They may not have a place to go. They have a lot of deciding that they have to do, figuring out where they're going to go next. So by giving them maybe even up to 60 or 90 days to close, that may entice them to take your offer. Sellers, I know you're probably not happy about hearing my buyer advice at this point, but hey, if I'm representing you, that's one thing. In this case, I'm talking to the buyers, and when I'm representing a buyer, we're coming in strong. Now, buyers, it's your turn to win. All right, guys, thanks so much for watching this video. If you like it, give it the thumbs up. And if you haven't already subscribed to our channel, we'd love for you to do so and hit the alert bell. It will let you know every time we upload videos just like this. See you next time.
Sachs Realty, Maryland broker number 607720, office number 443-318-4514, equal housing opportunity.